All right, let's talk about the broader markets. They are trying to build on yesterday's gains that saw the Dow close at a record level. Shares of GameStop also rallying again, soaring in a surprise move for no apparent reason, at least that we know of right now, although some pointed to the company's C-suite reshuffling. So can the markets keep going gangbusters in a rising rate environment? For that, we're going to ask Jeff Saut. He's founder of Saut Strategy and portfolio manager and chief investment strategist at Capital Wealth Planning. Jeff, you've been watching this stuff for a long time. What do you think of what you're seeing right now?
I think we're in a secular bull market. You know, in the book Reminiscence of a Stock Operator, there was a character named Mr. Partridge, and he was affectionately referred to as Old Turkey. And he was the shrewdest stock operator out there. And so investors would come up to him and ask him what to do, and he would cock his head to one side and contemplate the question. And with a wily smile, he would say, "It's a bull market, you know." And that's what we're in. We're in a bull market. And the problem is there's not many of us old enough that have seen a secular bull market before. I think this thing's got years left to run on a short-term trading basis, Becky. You know, we've had one heck of a rally here, and it's probably, you know, a little bit overdue for a pause or an attempt at a pullback. But longer term, I think the markets go substantially higher.
So any pullback, you'd say jump right in and buy, and maybe not even wait for a pullback if you think this goes higher for years.
Well, if you've got new money, let's say you've got $1 million, I think you take $250,000 of it and you put it to work today, and then you maybe wait 30 days and see what the markets do, and then you put another $250,000 into the markets. But again, I think the market travels substantially higher from these levels.
Jeff, there's been so many questions about what would potentially end this bull market, and rising rates has been one thing people point to. We're now looking at the 10-year back above 1.4%, and granted, that's, you know, nowhere near the types of levels you would normally expect would really shut things down. But we have seen that yield move kind of rapidly, and it's got people wondering if we get to 2% sooner rather than later. What do you think?
I have no idea, but I think even at 2%, I don't think it stops the secular bull market. The secular bull market will end when whatever it is, $5 trillion that's sitting on the sidelines. I mean, if you go out and scratch most individual investors, they're scared to death, and they're sitting on a ton of cash. I mean, I talk to financial advisors and portfolio managers all day long. And the average investor is, you know, just a non-combatant in the equity markets.
Because things have run so far and they get nervous about what they see, some of these potential warning signs when you look at some of the SPACs, when you look at some of the retail activity?
That's exactly right. You know, they think it's run too far, too fast, and it's because they haven't seen, you know, what a secular bull market can do. I mean, you look at the 1949 to 1966 secular bull market, and that's what we're in. And it's probably got another 5, 6, 7, 8 years left in it.
What does, you think, end this bull market?
Well, I think if you had a substantially rise in interest rates, that would certainly be a headwind. But I don't think you're going to get that. I don't think 2% on the 10-year. I don't think that ends it. If you get a geopolitical event would be the thing I would be most worried about, but I don't see that happening. So I don't see what ends this thing.
Shepard Smith here. Thanks for watching CNBC on YouTube.